We'll touch all about RH, Restoration Hardware, talking about what's going on in their kind of business and also the environment that they see on out there right now. We'll touch some earning stocks, Constellation Brands, Walgreens. We'll talk a little bit about Coinbase, Spirit Airlines, Pfizer and BioNTech getting a good deal there. We'll do a little bit of ticker time. You guys smash the thumbs on up. Let me know what stock is on your radar in the chat so we make sure to go ahead and touch it. And welcome to Pre-Market Prep. Let's dive on in.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Yes. Dennis Dick, whoever's that. Yes, we do have an 830 number today. Let's go ahead. Let's bring on my man, Joe Elconin, Dennis Dick. What's going on, guys?
I'm ready for the 830
Dennis Dick
number.
In the chat, man.
I'm ready for the 830 number. I'm telling you, I'm ready. I'm going wide.
Going wide, man.
Thanks to Christian Fromhertz. We know about the 830 PC deflator.
You know, it's one thing I noticed that he uses often. He uses the Bloomberg Fed calendar, man. That puts it nice and easy. I'm not gonna lie, I miss using some of the Bloomberg terminals at school. But let's go ahead. Let's dive on in, Joe. What did you see in the overnight action?
Well, first of all, sorry I was a little late. I was signing up for an economics course at Oakland Community College.
We got all the economics jokes today.
Yeah, I just got to know that stuff. We never had a shot. I mean, we kind of closed right in the range of Tuesday's close. They started selling off the open. They sold all night. They've been selling this morning, pre-market low, 60.75. Nothing there for you, folks. Really nothing until an intraday low, and that's about 23 handles lower. So nothing in there for you. Easy up, easy down. Crude down $1.31, 108.48. Gold descending on 1800, down 1270, 1804.80. Silver, that's getting close to $20. That's down 41 cents at 20.33. Bitcoin loses 20K.
Where is it?
Now, the futures are at 19,030, down 11.55. Now, will that 20K be resistance instead of support? Ethereum futures, they're going down even more on a percentage basis. They're down $150 at 1014.50. And just the one, we talk about inflation hedge, this, that, and the other thing. Or it's correlated with the triple Qs. It didn't rally during all this inflationary period. It didn't rally with the triple Qs. I mean, what is it? What's going to rally? If anything is going to rally Bitcoin, Dennis?
We've said it all along, and JC Press, tweeted out. We said that 2 weeks ago. It's a risk asset, so it moves with the Nasdaq. I mean, it may not have been 5 years ago, 8 years ago, but the masses are in it now, and it now moves along with the retail masses. It's a retail, massively owned product, massively owned, whatever it is, but it moves with the Nasdaq. So as tech stocks tank, Bitcoin is tanking. You can clearly see the correlation over the last year. So I think we just got to, understand that the people who were holding this a decade ago or 5 years ago or 3 years ago are completely different now. It's all massively owned now. So I think it's just a risk asset. So if, we start to get a bounce in the overall tech market, we can start to see Bitcoin come back. But until then, I mean, the technicals do not look good, Joel. You can say the technicals all you want. Like this 20,000 is what you have on Bitcoin. The 20,000 was a key level. We start to take that out. Now you start thinking, do we have a date with 15?
I think 17 first, and I think I can remember that you hopped on it. We had USCO on a long time ago, and you hopped in before it broke through 20. I think 17 This was a while ago, and it broke 217. So,
Yeah.
yeah, your next monthly low, and these are basis to futures, which I think do a pretty good job, is 16,990. So 17,000. Unless it could show clear a bid above 20, then I'm looking for 17K. That's
Guys
just
know.
purely technicals, short term. What do you think, Mitch?
I'm backing up the truck at 10. I talked about it. I'm going to get ready. And one of the things I'm going to be is patient. I think in this market, you got to be patient.
Oh, and that is the key to this market,
Patience,
Mitch.
patience.
That is the key to 2022. Is the longer you wait, the cheaper your stocks get.
Yeah,
so
and that's what
congratulations
I'm thinking,
to everybody who's 100% cash. I mean, congratulations.
Well, not 100, but I got like still 70% in the long term.
I mean, you're laughing. If you're 70% cash, you're kicking ass and taking names in this market.
Well, tell you the truth, I'm losing it to inflation, Dennis. So I don't know how much.
I don't mind losing 8-10% to inflation. It's better than losing 50% on these bloody stocks. Because every time you try to get a little bit bullish, I've tried. We know I have tried. It just turns around and tanks in your face. So it's a tough market. With that being said, I'm nibbling on stocks. I'm nibbling on some stocks in the long-term portfolio. I was 50% cash, down to 42% cash. But I'm thinking I'm going to try to bring it into like 35% cash here shortly. We'll see. We got to know what the CPI number is going to be. This PCE deflator number is going to be a big number here
let's
today.
Talk about that.
But there's so many stocks that just keep getting rocked. And it's like every time you start to think they're going to turn around, they just hammer them again. So, I mean, today, it's Bitcoin stocks are all getting hit, but it seems like there's something every day. And here's another issue is that we're going into earnings season, Joel. Are these earnings going to be good? I mean, we've been talking about the demand destruction on this show for a long time. It could start showing up in some of these earnings reports, and it's already starting to show up in warnings. And maybe we should segue into the restoration hardware last night, because this is not good news.
Yeah,
hey, Dennis, what about you know how you like to play like the earnings, pre-earnings rallies? Maybe this quarter the trick is just to short them into the reports.
Well, that was the play last quarter, because if you would have just shorted every stock and every report, you'd lose on a few that popped up, but it seemed like the ones that even popped up a week later, they were giving it back. And the ones that went down just kept going down. So the shorts, and people don't like to hear that, but they've been winning in 2022, winning. Is it going to get tougher for them? I think so. I think a lot of bad news priced in this market, but we got to start seeing improvement in the inflation data. We'll get a little bit of a data point here today thanks to Christian Fromhertz, saying that the Fed does look at this data point. Obviously, big CPI data is coming. So we got to start seeing improvement. We got to start seeing that the Fed's plan is working. We did not see it last month, and it was an excuse to basically sell stocks the entire month. So until we start seeing improvement in the inflation data, it's hard to own stocks. I'm hopeful today. Maybe we see a little tick. Maybe we see something, a glimmer of hope. But it's been a tough market to be long.
All right, let's go ahead. Let's transition into that restoration hardware and what came out of that. But before that, I want to definitely just touch really quickly. We are going to get initial jobless claims at 8:30. We'll also get Chicago PMI. That's going to be released at 9:45. So check that out. We get core personal consumption expenditures. That's at 8:30. And just to kind of touch them all, we'll also mention here the EIA natural gas storage data is due at 10:30. So you guys can't say we didn't touch them all there. I even included
all kinds of economic data points coming.
The
chat will be very excited for all these economic data points.
All our economists.
All of our economists in the chat are ready to trade.
Listen to feedback, guys. And if you guys got some feedback and want to improve the show, there's one thing that we're about, and that's definitely getting to what you guys also want to hear. So there you guys have it. Let's get into restoration hardware, sharing updated its fiscal 2022 outlook. I think the comments are something that definitely kind of shook the market, but the company said it projects demand to continue to soften during the remainder of the fiscal 2022. As a result, the company now sees revenue to be down 2 to 5% for the full year. It said also deteriorating macroeconomic environment has resulted in lower than expected demand since our prior forecast.
Yeah.
You talked about mortgaging rates doubling last year level. Luxury homes down 18% in the first quarter. And he also reiterated the Federal Reserve's forecast for another 175 basis points to increase the Fed fund by the year end. Definitely the expectation is demand will continue to slow throughout the year.
This is the type of stock, type of company that sells stuff that gets hit first. And we've talked about demand destruction, but expensive furniture is, so again, rich people are always going to buy their stuff, but the economy isn't driven by all of the rich. It's driven by everyone else as well. So there's been people that probably have been paying up and maybe couldn't afford stuff like, at Restoration Hardware. You go in there and Joel, the prices of stuff. You go in there, couch $5,000. So, it's a very expensive store. So when times start to get tough, it's big ticket items that get hit first. Everything in that Restoration Hardware store is expensive. So it's the type of stock that is going to get hit, the type of company that is going to get hit first. So definitely ground zero. I throw it up there with the automotives, the home builders we've talked about for a long time. Who the hell is building a home when leverage, and money's getting tighter? Restoration Hardware, same story. Tough. Yes, there's value. Williams-Sonoma, same thing. You can say, oh yeah, there's value here, but inflated earnings from the last, little while here because it's been good times. Let the good times roll when the printing press is going. Printing press is not going anymore, so the good times aren't rolling here anymore. Now you got a stock breaking down, making new lows on the move. I always say when a stock's making new lows, you gotta go. So here we are. It's down $21. People are going to buy it and say there's so much value here, but I think it's again a value trap.
There's stocks that we're wrong on, like in the short term and stuff, like this Restoration Hardware. We were bearish from 100 to 700. You kind of get, if you don't trade it on the way up, you trade it on the way down. It's one thing. What I would do, one reason I don't want to own this stock, today or at any level, is what the next thing is coming is, right?
Mm-hmm.
They're going to be laying off employees and closing stores.
Yeah.
They got to start cutting costs. This is
100%.
They're not selling stuff, so maybe you think, oh, the cost cutting savers plan rally, maybe, but what else? What else could save the stock? Trading on the lows of the pre-market. This is a thinner stock. The pre-market lows 213.28. I'll just give you a monthly level, and that's about all I can give you, and it's right around 208.81. It's a possibility today, then maybe 200, but if I was waiting for more, 208.81, and your recent last 15-minute high is 220, so needs to get above that 208 to 220, but this is a tough one.
Williams-Sonoma, direct hit with
Yes.
this, very similar business. Wayfair online sells a lot of stuff too, cheaper, I grant you that, but again, going to get hit on this. This is going to just filter out into the home builders to a certain extent because they were blaming housing. So I got to think Home Depot gets hit off of this. I got to think Lowe's can get hit off of this, which it already is. I got to think, other retail stocks too.
I got some for you.
What else you got?
You got FND, Floor and Decor Holdings. You got LL Flooring Holdings. That's definitely
Lumber Liquidators. Do you know the whole Lumber Liquidators story?
Yeah.
Okay. That was a while ago. That was
that's a good
else.
one
The
there.
formaldehyde?
Yeah, Whitney Tilson.
And this is a little bit smaller, but also there's the Tile Shop Holdings, TTSH.
Just a pile. Anything to do with housing gets hit on this. Anything to do with housing. So
even the pool supplies, Leslie could get hit on this. LESL.
Well, that's pools, right?
Yep, pools.
But pool, bring up that
pool
stock.
Also.
All of these things, they were in the glory days. And don't kid yourself. You'll go into these shops and they're actually they're backed up. They're still backed up to a certain extent, but it's that going forward, just because, they're all booked up here What's happening out, a year from now? Because you're still filling orders because you were backed up for 6 months to a year. But what's it look like out here? That's the concern. So again, I think there's buying opportunities in some stocks. I don't want to own anything with housing. Nothing.
Well, definitely going to have to keep on watch stocks like Lennar and I would say Toll Brothers and KBH.
They can get hit a bit. The one thing to consider is they've already been hit really hard.
Yeah, they get bounced though with that earnings, right? And so
I wouldn't want to own
these
them
on my radar.
I wouldn't want to own them here either. It's a tough market.
It's a tough one, man. That's
it's a tough market. And housing, anything to do with housing, looks cheap, appears cheap. They're all value traps. They've been value traps. We've been bearish housing on this show for a long time, and correct. Wrong about lots of things. Definitely right on housing.
Yeah, I've been wrong for over a year about housing, but I think something's going to get me right on housing. We'll see. I know Bill in the chat, he's watching me. He's watching me on that housing call. Let's keep going.
What's your call on housing?
Oh, I've been called that housing would come down from these. I thought that we would get another housing bust just because prices were going way too high. And then when prices go way too high, a lot of the times you're just getting a bubble, right? Bubbles eventually always tend to kind of pop, right? I mean, let's just be honest. Like the GME bubble and AMC bubble is gone, guys.
It's the input cost, Mitch. It's the input costs. And I know this better than anyone from building the house. It's the stuff that goes into the house that drives real estate. So the real driver behind your real estate prices is the cost of build. Because if your build, and just like I said before, I've said this before, in Canada, they were building $300 to $500 a square foot before the pandemic. They're now building $400 to $700. That's where the new costs are. That's what the builders. So high end before the pandemic was $500 a square foot in Canada. It's now $700 a square foot. It's went up that much. So if your housing build costs go up 30 to 40%, it naturally flows into your real estate and drives it up 30 to 40%. Now, some of those input costs are going to come down. Lumber has started to come down. Steel has come down substantially. Labor will be sticky. It is hard to give people pay cuts. And just like I was saying, electrician went from 55 to 75, an hour. Like and it's not just them, it's like everything. Like you're not seeing like 2-3% increases on costs of skilled trades. You're seeing like 25-30% costs. Those are sticky. Those are going to be hard to bring back down. So you got to think still. I've still got to think like, everybody's saying there's going to be this huge real estate market collapse and prices are going to come down a bit. But at the same time, they're not going back to where they were pre-pandemic unless those build costs come back to where they were pre-pandemic. But we're not a real estate show. We're a stock show.
Well, I just want to throw in rates too, man. Congratulations.
That's the number one evil.
Yeah. The rates, man.
Killing them.
Yeah.
I mean, your mortgage rates. Look at what has happened. People can just afford a hell of a lot less houses. That's why it is so tough to be all in on housing, despite the valuations looking attractive. So is there a point in time where housing, gets cheap enough, the home builders, where it gets cheap enough where it's attractive? I think so, but I don't think we're there yet.
Yeah, it's going to take a little while. One of the things I've always seen is housing lags a little bit behind what's going on. It takes a little bit, right? I mean, even with rent, there's still a lot of people that are cycling through the new rent prices. So I think that's still going to roar its ugly head. But let's keep it going here. Let's get into some other stocks. Let's go into Walgreens earnings. I think that's important. Definitely take a look at. Let's take a look at that. And here, Walgreens Boots Alliance Q3 EPS at 96 cents, beating the 92-cent estimate. Sales were at $32.6 billion, beating the 32.06 estimate billion there. Walgreens Boots Alliance maintained a full year 2022 adjusted EBITDA and their guidance of low single-digit growth here, though. And definitely you're seeing a little bit of a retrace there. A lot of people were trying to focus on that guidance to see if they would up the guidance with what's going on in other kind of situations that we're kind of keeping an eye on right now.
Lower beta stock. Nice dividend, 4.77%, which isn't as nice as it was when we were in a 2% environment, but it's still a decent dividend. You got some support down at 39. It's just there. I mean, if you buy Walgreens, you're not going to lose as much as the S&P overall usually because it's got the lower beta. But I mean, until we start seeing this market stabilize, why own stocks?
I mean, this hasn't really done much, in any environment. I mean, the most concerning thing
Very
about
underperforming. Big
Look at
underperformer.
this. Look at this. This is this is your COVID low. Okay. After the COVID low, you went down even farther. And that was in the middle. That was in June of 21. I'll just not much to say about this one. Just a long-term horrible performer. If you want the dividend, get the dividend. Dennis mentioned a potential area of support around 39 and a quarter. CVS, boom. I mean, that's performed a lot better.
A lot
I don't
better.
know yeah. Yeah, I guess if you want to go into junk, you know what the thing about the Walgreens, man? I go into the one all the time. They're constantly rotating people that work there. I don't know if that's like part of their shtick or just people keep quitting. I don't know what it is, but
it's boring. It's boring, Joel.
Yeah,
I'll
that's
just tell you, man. It's freaking
Walgreens.
boring.
They did another nail in the coffin for companies that change their symbol. They
Don't
probably
change your
started
symbol.
it all.
They got to stop changing their symbols.
Why? I mean, how could you get a better?
Paint walls green again.
Stop changing your names and stop changing your symbols. That's what we got to stop changing our names. Square to block, Facebook to Meta. Just stick with what's working. Google to Alphabet. Stick with what's working. So I agree, Joel. Stop changing your ticker symbols and stop changing your names. But I mean, this is bringing it back into the overall market here, and chat saying it's depressing. It is depressing. You watch your long-term portfolio going down. I own stocks, 60% invested, and it's like every time you think you're going to get a bounce, you don't. I do think we're going to get a nice short squeeze. We're going to get a bounce here eventually, but
we got to bounce, Dennis.
What's this data going to look like today? Maybe the data is going to give us some hope. So in 7 minutes, we're going to get some economic data here.
Yeah,
maybe it's going to help.
In 2 minutes.
Maybe the whole world will change at 8:30. Maybe the whole world will change.
We start seeing inflation tick down. That would change everything. So that's what we need to see. To get a sustained rally, we'll go right back to what we were saying a month ago. We need to see the inflation data start to tick down.
I think we're going to get that, but not in the July number. The reason why I would say not the July
tell me
number.
It's another month of pain.
Yes, there's a reason why I think so. I was talking about it with Jay Woods and some other analysts that I have on Stock Market Movers. The biggest thing that I think happened here is we did get some commodities coming down, but that was late June, right? And normally that CPI number is drawn in early June. In early June, we weren't getting that retrace in energy and that retrace in the commodities. So I'm going to go ahead and go on a limb and say that we'll still be hot in July. And then I think in August is when we'll start seeing that kind of really start showing up on the CPI data.
I'm hoping we start to see a tick down in the next CPI report. I hope we see a little bit of positive data here today. Should we talk about shopping lists? That's a good question. Martin's saying, what's my shopping list? I mean,
yeah, let's talk about that while we get into the numbers. I'll be paying attention to the numbers. You guys talk about shopping lists.
I bought some Meta yesterday, 2 days ago. I bought some Meta. It's pulled back. Not that I'm a huge Zuckerberg fan, but I feel like there is some value here. I feel like it's come down enough. Stephanie Link was on this show. She's very smart. I respect her opinions. She liked the stock. I bought a little bit of that, just a piece, half-size position, just nibbling my toes. But again, I'm buying stuff that's making money and that's trading at a reasonable valuation. I'm not buying nosebleed stuff in the long-term portfolio. So people are asking about Intel. Intel's just got so much bad going on. It's been a value trap for a long time. I sold it up at 52. It was unbelievable that I got out of that stock, basic with my money back out of it. It's down here at 37. I think there's value somewhere in Intel, but the story is so ice cold. So I don't know. Joel, you own Intel.
I'm not buying it. I haven't bought anything. I can't tell you in how long. That's
good news.
Yeah.
Every time I buy something, I lose money.
Yeah, watch all the crap I have go down, but it's just I don't know. There's just it's just a different environment. I mean, you try and look for some conservative things out there, and there are a few things out there. One that we have been talking about for a while here, and Dennis, you may get your shot today, and Kathy.
I said 40. I said, and we're going to know a lot more. Okay, so we almost have to hold off opinions for 4 minutes.
Okay.
Because we're going to get some CPI, or we're going to get the PC deflator data. It's going to give us a little bit of a glimpse. The Fed watches the data. That's what Christian Fromhertz said. So let's see what that data in 3.5 minutes comes out. And then, obviously, we know the CPI is going to be the big number.
Also,
coming into earnings season, we need to start seeing glimmers of hope here, folks, coming out of anything inflation data. So that's what we need to see before we start striking. You can nibble your toes. If you're 100% cash, I'd have been nibbling already. I know I was 52% cash. I've brought it down to 42%. I've been nibbling. Every single thing I've nibbled has went down. So, I mean, it's tough. It's a tough environment. With some people saying, would you buy AMD here? I already bought AMD. Disaster. Dead wrong timing. It's been dead wrong since dead straight down since I bought it.
Put it in the wife's account. Don't worry about it, man.
In the wife's account. It was in my account. But you know what? I think you're nibbling on AMD here. I got to think you're going to make money in 5 to 10 years. You're going to make money next week? It's making new lows. So I'm not going to own it for a trade. But as a long-term investment, would I nibble my toes here? Maybe. I'm in it.
Yeah, it's something 40, definitely keep watch. Just want to give the expectations here. Also, we're going to get jobless claims that come in at expected to come in at 226,000 for June 25 week compared to 229,000 in the previous week. Remember, guys, the last 3 weeks we've had that 229,000 number expected to come down here a little bit. Just pay attention to see if it does come in hotter, I say, than that 229 number, because that would, break a 3-week streak at that same number, and coming in higher is what I'm going to see what happens here. Also, we'll get a couple numbers coming in at the same time. I will do my best to try to get it up for us as fast as possible. But like always, one of the ways that you can be watching this the moment it hits the tape also is just having Benzinga Pro. So get your 2-week trial, no credit card needed. All you got to do is just go to pro.benzinga.com, and you guys could be watching it and getting it first also. Just to kind of state, one of the things that I would say is if you're relying on getting this economical data in real time, then you should have your own platforms to get this data, then reacting yourself versus getting it from a show. But just going to put that out there.
Yeah, the only data that I'm looking at is inflationary data right now. So we're going to get that PCE deflator. Let's see what that's all about. See how the market reacts. It's going to move. Yeah. I don't know. I want to be bullish. I want to be bullish. And part of me
we're less than a minute away.
That it might be okay, the data today. Part of me thinks it might be okay. I'd be scared if I was short. I wouldn't want to be short in this data. What is the preview on that PC? Do you have the preview on that, Mitch?
I got you right now.
Mitch bringing it up. It's coming out in 30 seconds. I'm actually going to go.
Yeah, I'm just looking at the tape right now
because stuff might move
really quickly for us. All
right. We're the low of the session 60.75. Not much in here as far as resistance or support. Resistance, man, I'm sure a lot of people would like to see that low right at yesterday's low at 0.125. That would be your first resistance point. I'm not sure what mid-range on the session is, but
all right, guys, I'm going to show you guys here from Benzinga Pro here, our economic calendar. We can take a look here on this to kind of watch here. So if you can see here, guys, if you guys are using Benzinga Pro, you can go to the calendar, you can go to the economics. You can see here personal income consensus estimate is at 0.5. Prior it was 0.4. I'm going to definitely look at it when it hits tape right now. So there it goes, hitting the tape. Let's go ahead and I'll take a look here to see what we get. Let me focus in and try to get us that number, and we'll see how it kind of hits.
It looks a little benign here. It's just exhibited by the price action in the S&P. You had a little bit of a dip before, but there you go.
Jobless claims coming in a little hot here. Dim game getting that. I'm going to go ahead and try to get us also the PCE number there, but I did see this coming in at 231,000. Remember, versus the 228. I guess they had that estimate, an updated one there. Prior was 229, so that coming in a little hot here. Trying to get the other number here as it hits the tape.
Yeah, I mean, whatever the personal spending's down a little bit versus the estimate. Right now, the initial move is higher off this, right? You had a 200-point sell off from that 39.50 to 37.60. Little bit of nervousness ahead of that number.
Do you want to put your chart up, Joel, as we
Oh,
see
I'm
the
sorry.
action?
I did. Oh, I'm
No
sorry. I
worries.
took it off. Hold on a second.
Gotcha.
Too busy being focused here. Share screen. Boom. So there, there's the pop right there. They dipped it under the right before the number. That's only a 1 minute chart. Doesn't mean anything. But if anything, people that did not, buy it on weakness over the last day and a half maybe got a little bit nervous ahead of the number. And there you go. 82.50 is where we're trading. Little pop. High of the rebound has been 84.25. We'll be keeping an eye on that. Long ways to go to get to mid-range on the session. We've had 40, 65, so that's 32. I mean, for right now, I don't even think about mid-range. I'm sure a lot of people like to see the bottom of yesterday's range at
Sorry,
1
guys,
and a
that took a
quarter.
little longer than I expected there to show up there. Here you guys have it here. USA core PCE price index for May at 4.7 versus 4.8 estimate. Prior was 4.9. That's year over year for May. And this is with the core PCE price index here.
Okay, it's a pop, but it's a pop that's been sold. So we'll see. We'll see.
Yeah,
if,
I think the jobless claims there is having an effect, but who knows really?
Yeah. I don't know. I mean, we are basically where were we at just before the 8:30 bars started? I mean, we're up a little bit. So right now, whatever you think of the numbers, whatever you think of the claims, whatever you think of the PC data, right now it's having a little bit of a positive impact on the market. So that's the best information I can give you on that. And I don't know. Let's see if any stocks
back.
actually, yeah.
We
Little
popped about
pop,
7,
huh?
8 points on it. I don't know. It seems like a meh. So I think we kind of go right back. I don't think this is going to be the one that turns us around. So it'd be nice to say, oh yeah, this is going to be, helpful here. I don't think this turns us around. I don't think this moves the needle. So now you start thinking about CPI coming up here. So it's not going to get everybody bullish. It was just a meh. Just my opinion.
Yeah. No, and we're almost back to where we were at before the number came out. So the street's agreeing with you. Nice little pop, but fading once again. I guess that for me the main thing would be after the big overnight range, is can they defend that pre-market low, right? I think the pre-market high is pretty safe for now. Don't see much under that pre-market low of 60.75. The 17 handles away. So we'll see if that can be defended. Is it time to talk some commodities?
I think we all need that to a little talk of commodity action, especially what's been going on recently. We've been seeing some pullback. We've been seeing mentions on both sides out there. Let's go ahead. Let's go towards our expert today. Let's bring on Angie Setzer here, co-founder and partner of Consensus Return on Investments. How do you say that? I just want to make sure we said it. Consensus. All right,
Yep,
there. I just want to make sure I get that right here.
No, it's
let's
fine.
go ahead. Let's put you on the screen here. Let's go ahead and find out what's going on in commodities. I know I've been confused, so put some sense into me, Angie.
I don't know if you can. I mean, I guess we're seeing your seasonal sell-off. I mean, traditionally you'll see wheat weaken. Of course we don't lose $2-3 like we have here over the last few weeks, but soybeans, corn tend to weaken. We have a big report out at noon today, so we're kind of holding our breath into that. But what isn't going on right now, I guess, is the best question, because it feels like just about everything's taking place in the market structure, at this point in time.
Looks like the chat is asking us about corn and hogs, so I'm gonna go first to that. Let's touch them up a little bit. Jar Jar asking about that, so shout out to Jar Jar. What do you see out there, Angie?
Yeah, well, corn, I mean, I can't see specifically what they're what he's wondering, just wondering what's going on in corn in
Yeah,
general,
he's just
or
wondering the outlook in there.
yeah. Well, like I was saying, I mean, the big question right now is what does the USDA say today? We've got an update in planted acreage. So one of the biggest things that we saw, happen in corn, if you're kind of paying attention to what's taken place over the last 6 months, is we started the year trading around the mid five range. Really, kind of felt comfortable with supply availability. We were a little nervous, had a risk premium in place, for a Russian invasion or something of that nature, but really didn't expect it. And so suddenly we had the Russian invasion there, the tail end of February, spiked a buck. And then at the end of March, the USDA came out with a lower corn acreage number than what most folks were anticipating. We spiked another buck. We've since kind of lost what you could say we lost the one of those dollars just recently here as we've kind of fallen off pretty significantly with, we've gotten the crop planted. So far, conditions look reasonable. Short-term weather forecasts look like they're going to be conducive to relatively decent production potential. And we're kind of holding our breath on demand. Ethanol is the bright spot in demand, but export demand, is pretty poor. We had marketing year lows in corn exports this morning. We saw China work out a deal with Brazil, though they're still working on some phytosanitary figures there. But the corn side of things, as I was saying, the further we get into July, the more confident we feel in what our production will be. The big questions that kind of remain in place right now is how much old crop corn do we have, and what does that mean for what we'll have at the end of the year? And then how much demand are we going to be seeing over the months and weeks and months ahead? And then, of course, the big one is what kind of corn crop are we going to produce?
Angie, the last time we had you on, it was like just in the start of the
Yeah.
crisis. And, I was worried about enough food. We had that conversation. You told me not to worry about it. And you were all correct on that. And, here you are, talk. And I talked about this the other day. When you have the move that you had in wheat, right? I mean,
Mhm.
you have farmers, right? This thing goes from it basically doubles,
Mhm.
right? I mean,
Yeah.
for me, when I look at the market dynamics of that, and I know that your clients are hedgers, right?
Yeah.
So, I mean, and the way you were talking was, you got to take advantage of this opportunity, right? You got
Mhm.
to, selling your crop out. Now, I hope that a lot of your clients did do that, and they're sitting. I mean, man, think about it. 12.80 a bushel for wheat. Now that it's 9.25. To me, I think the dynamics and why these commodities are so violent is, on the way ups, you just have speculators just buying
Mhm.
the daylights out of it, right?
Yeah.
Like,
Yeah.
beans in the teens. And you have the hedgers selling it, right? They're like, okay, you want to buy it? Wow, it looks bad. I sold it at 11.50. Yeah, it went to 12.16. Yeah, it went to 12.80. But when these things turn, those
Yeah.
farmers are not sticking bids out there. They're
Yeah.
n- they're not sticking bids out there. They're just like, okay, I'll deliver. This is yours, sold to you. So that's just a market dynamic as well, about that. So I just wanted to see if you like to know how your clients did on that. I sure hope they hedged out to several years out and
Right.
just talk
Oh,
the
yeah.
dynamics on the way down.
Yeah, yeah. Well, yeah, and I mean, that's the constant fear in which we live, you know what I mean? And maybe fear is an exaggeration, but it definitely is one of those things where my role as a risk manager comes into play. I'd be lying if I said we didn't have customers that had $6 or $7 wheat contracts on for this coming year, just because historically speaking, those were good values. We didn't expect a war and a poor fall and some of that, but those are small percentages of sales in the overall crop. So one of the things that we try to do with farmers, or as farmers, what they try to do is really work to incrementally scale sell into it. We don't know what we're
Oh
going
yeah.
to have 100% of the time. We don't know what production is going to look like, what weather's going to look like, but our goal is at the end is to have the average of our crop prices of everything that's sold, at the top third of the market structure. And so yeah, the majority of the customers that I have been continually selling, small pieces of their expected production into this rally. And we're sitting okay. Now we have to see where we head. We're most of us are sitting, around 30, 40, 50% sold depending, and
Wow.
we're going to see where the market heads. So yeah, it's definitely um this type of market structure is scary. It's scarier for anyone that ever experienced the 2008 market, because that one was super explosive for corn. We traded up to over $8 and ended up at $3.60 by the end of the year. We had a group of ethanol plants go bankrupt, things of that nature. And so you'll hear stories, and we'll probably hear stories about what happens in 2022 and beyond. If we see a global economic slowdown and an increase in cost and borrowing, and some of these other things that take place, it becomes that much more vital for next year and the years beyond. And typically it's hard to market like that as a farmer, just because you're so far removed from what your production is going to look like this year, next year, the year after, so you're kind of chasing down these sort of wild variables. But it, it's it it's definitely not for the faint of heart, I guess is.
And then, and then also I can imagine that, hey, you're selling some at wheat as an example. You're selling some at 11, then you're selling
Mhm.
more at 11.50, and then you're
Yep.
selling even more at 12. So,
Mhm.
well, good. I just a couple things. The whole inflationary impact. We know these are smaller components. We know the crude oil is really a big factor because it affects a lot of different businesses and anything. And in your opinion, I mean, how much are the grains and the soft and all these other commodities? How important are they or to like the overall inflation picture compared to crude oil? And do you see any chance of inflation coming down?
I think so. But I think, just to answer your last question first, and then I'll forget what your first question was because that's my superpower. But yeah, I mean, I think the Fed's serious. I think Powell is very, very serious about what he says. I think last week kind of put that to rest on the sense of, oh, well, when we start to see, recessionary trends show up, he'll back off. I think he basically said in maybe a bit more elegant way a week ago that the risk of not taming inflation, in his opinion, is greater than letting a recession take place. And so globally, if we were to see that, I think you'll see a significant slowdown in demand. I think we're seeing a significant slowdown in demand for grains anyway. One of the things that you're seeing take place because of this sharp increases in wheat and things like that, is there's some growers and groups of growers in Africa that are looking at transitioning to more hardier varieties of grass grains that they are traditionally grown or were traditionally grown in Africa prior to the introduction of wheat. And you're seeing them switch their breads and things of that nature over to those grains. And so I think you're going to see a continuation of development in food demand. I also think, you've got a lot of things that are taking place from a global standpoint that could have a lot of ramifications going forward. What's it going to look like if we do open up the channel out of Ukraine and start to bring a lot of those grains into the marketplace and things like that? And so, yeah, I think eventually we bring inflation down. But I always feel like, or I feel like over history, I think we've really kind of recognized that the pendulum never swings just back to equilibrium and sits there. And so we're all aware of that, I think both in the economy and, in the commodity sector, to where we're probably going to overdo it, on the opposite direction. And that's going to be the greatest concern.
Before we let you go, can we talk a few stocks here related, to the farming industry? DBA, boy, that's just gotten killed with the agriculture. Well, I mean, it pulled back. It had a tremendous run. Now a little bit of a pullback. They're not making more land. I want to ask you about DBA, and then Scott's Miracle Grow here. That's just stock has been has not been growing. I just wanted to get your take on those two issues.
Yeah, I mean, I would say, Scott's Miracle Grow, maybe we're seeing a downturn in home gardening now that we can travel again.
Okay.
Let's lay a chart over of air travel demand with Scott's Miracle Grow stock, and we might find a correlation we didn't
Okay,
expect.
that's a good one. Okay.
That's like so and honestly paying attention, to the other outside markets. I think one of the things that you're seeing is that the confidence in agriculture is starting to fall off for a lot of the reasons that I said, a minute ago. We're really kind of putting ourselves into a really significant position of risk potentially, where we're outlaying a large amount of cash for marginal return. I think the other thing that you're seeing is the likelihood of increases in rates and, catching those that may not be prepared for that, because a lot of folks honestly I don't think thought the Fed would follow through. And I think that's part of the reason that we've seen these funds just peg the commodities, is to really force the hand of the Fed. And so I think, your confidence in what agriculture looks like and the margins that we're going to see in ag going forward, is really starting to fall off, which is part of the reason that, DBA is kind of weakening, is you're seeing just folks change, focus attention elsewhere, or maybe even just go to the sidelines. And so the same is true in ag as it is, really anywhere else right now, I think.
We've been on the line with Angie Setzer. She's the co-founder partner at Constance RI LLC, married to the King of Corn. How's the King of Corn doing, Carl?
He is he's doing great. So very well.
All right. Thank you, Angie, one of our commodity experts here, giving us a little hand of a chance of some slowing inflation. Inflation is what we all need. Thanks again, Angie. We'll talk to you again soon.
Thanks for
A little quick to the gun there. I normally am pretty good with that one, but sorry cutting you off there a little bit, Angie. Let's go ahead. Let's keep it going, though. Let's take a look at some other stocks out there that are moving just released. Looks like Spirit Airlines wants to go for another week. They're talking about postponing the key shareholder vote proposed deal. To me, I think this is one of those, like, who knows, maybe JetBlue wants to increase the deal some more. They're just like, we'll keep
the saga that never ends. We talked about it yesterday. I mean, we're just wasting our time talking about this.
Yeah, I can't even follow it. Who the hell?
It's a saga that just never goes away.
Yeah,
the deal we've already talked about. I don't even want to talk JetBlue.
You know what? What I do want to talk about is the cruise lines. Holy mackerel!
It's nonstop selling, Joel.
But I mean, just kind of talk about what Joel and I talked about at the close yesterday. And Dennis, I would love to hear your comments on this. Is that what we're seeing, at least in the price action of these stocks, is completely different than what we're hearing from the earnings and from the mentions of travel going on right now. What do you think about this, Dennis?
Yeah, I mean, everybody is talking about how the travel is crazy, how everybody's back, and we're not seeing that, because right now you've got that people who book their trips aren't canceling their trips, but are people booking trips out a year here right now when all of a sudden the last 2 months they've gotten tighter for cash? This is another low-hanging fruit. People aren't going to go on expensive cruises if they're tighter for cash. Perfect storm for Carnival Cruise Lines, for Norwegian, for RCL. Higher fuel costs, higher expenses. And then if you look out, demand, probably destruction starting to occur. What does that add up to? Potential bankruptcy. It's on the table. I mean, we had Morgan Stanley coming out with the potential of, 0 on CCL. It's not I kind of agree that there's the possibility that CCL could actually go bankrupt here. So, I mean, it's a scary thought. I love those Carnival Cruise Lines, and they'll continue to operate even in bankruptcy. But just to come in here and say, yeah, this is too cheap now, I'm buying at $8.58. I mean, the debt's trading at 70 cents on the dollar. So when you get to that point, there's problems. There's major problems here. So, I mean, we're challenging the pandemic lows when the ships weren't even sailing. So one, either the market is just completely nuts, or two, there's a non-zero chance that this thing actually could go bankrupt.
Yeah, you left out higher food cost and higher labor costs too.
Everything costs. Everything. Even the water that they're probably on right now, the oceans, they're probably charging them more. It's fees all around. I mean, you can't hide from anything right now. Wage inflation, The Fed pumping money. I mean, really. And these guys are debt cows, right? I mean, interest rates
Oh,
going
a
up
lot
on
of
them
debt.
too.
That
So, I
can't be
mean,
helping them. Yeah.
honestly, if I've talked about it yesterday, if I was the CEO, I would be like, can we just catch a break? And I don't think they can right now.
And people asking, what about selling cash covered puts on cruise lines? I mean, if you're writing the puts, you're saying it's not going bankrupt. That's the bet. I don't know if that's the case. I think a lot of these companies are in a world of pain here right now. So I'm scared. Yeah, I actually did have some bullishness on the cruise lines about a month ago. I did buy Norwegian, but I turned around and flipped out of it when it started to break down. So again, I don't want to be long stocks making new lows. It's tough to be long. So let's just go. What can you be long? You can be long companies that aren't burning cash. You can be long companies that are trading at reasonable valuations. They'll have some support somewhere. Cruise lines burning cash right now. They're going to be, in a world of pain for a long time as long as fuel and expenses stay elevated. And money gets tighter. So I don't want to own airlines. I don't want to own cruise lines. I don't want to own casinos. I don't want to own anything, and that's travel stuff. But I own Disney, and that's been a bad one for me. But I do think Disney, I don't think we're going to turn around and all of a sudden Disney One isn't burning cash anymore. Do they start burning cash? Do we start seeing demand destruction there at the parks? It's possible for sure. But I think if anybody is going to survive this, it's, out of all these trials, it's going to be Disney. I'll bet on Disney. So if you want to bet on cruise lines, I mean, Disney has cruise lines too. You get the parks, get the Disney Plus, the valuation's reasonable. If I wanted to be in the travel industry, I'd bet on Disney. I already have bet on Disney, so I'm not going to add any more to it. It's been a bad one. Everything has been bad. I mean, you're challenged if you bought a stock in the last 2 months. 2 months ago, it's highly unlikely that you're up in that stock. So I mean, we're in a bad macroeconomic environment. It's coming anyways. So I look here, NCLH, and RCL, CCL. Why is this the bottom?
All right, let's continue going here towards the other earnings stock today, Constellation Brands. Let's talk a little bit about that. Maybe the beer is good, Dennis. I don't know. Let's take a look here. They beat estimated earnings by 5.14%, reported EPS of $2.66 versus an estimate of $2.53. Revenue was up $336 million from the same period last year. And as you can see, it's not getting the results that it probably thought it would get off of those earnings.
Tough market. Joel, you were saying it before. There's a play probably to be short most stocks going into earnings because the ones that pop eventually give it back, and the ones that drop keep dropping. And the ones that report pretty good quarters, the Nike quarter was fine, and they say something on the conference call and they tank the stock anyways. Tough stock to be long any stock into earnings. Maybe the earnings weren't that bad. Doesn't matter. Stock's trading down, and it's wide here, so it is trade. It has ticked 228, but we're really wide. We're 228 to 240. So I mean, we're very wide here. This isn't something that I think is going to just all of a sudden just start tanking and getting killed. I mean, people still drink this stuff. People will buy during a recession. So is it safe? Nothing is safe if the bear market gets ugly enough. The thing is not far off its 52-week high, which scares me as well because they've started hitting stocks just because they're close to their 52-week highs.
True.
So I just probably stay away just because it hasn't been hit yet. And probably they hit something like this too. Why not?
That 228 bidder, he's looking at this low right here. He's like, come to Papa, 228. That was your June 21st low. So that's your first target. I don't know. You said the offer's at 240. I'd say if you want to own this thing and you felt like you really missed the rally, I'd first focus, see if you could get anywhere 220. I'll call it 224 to 228 would be a major buy zone for me. If I was trying to cover a short or potentially looking at a long, give it everything back after that nice June rally. Only 6,500 shares have traded, so that's not a ton. So, if one big buyer comes in, this thing could be at like 235, 240 in a heartbeat. But not hitting that 228 bid right now.
To me, I think this is also a battle of the seltzer game and that kind of phase and that hype kind of dying down. And that's also what has been reported in SAM also, is that the seltzer battle that they had, and they were getting a lot of love for that, is just gone away, right? I mean, you guys can look around. I'm sure you guys will see there's like 10 or different seltzers to choose from. It's not just like the classic two. So I think this
if
was
you
just
look at this
competition.
SAM chart and you're long Constellation Brands, you know, I know they're different companies. You're going, sold, out, done, leave me alone. I mean, look at that thing.
Sam's had all kinds of problems though.
Oh,
Completely
competition.
different,
Yeah.
completely different animal. The beer, it's not like when you get Constellation Brands hard liquor, a little bit different. Like you get these craft breweries coming up. They've attacked Sam. Sam has had problems for over 2 years now, really. I mean, I can't believe we got to $1,349 back in April 2021 when everybody was buying everything. But has it come down enough to get attractive? I mean, I think Sam is having so much trouble. Didn't they lose money last quarter? Let's look it up. Go to the details on Sam. I think they're not even making money right now. I mean, that's trouble. Or they at least made. Well, that's not the case. They just missed earnings, so they're making money still, but they missed big time.
Just think where Constellation Brands would be if they didn't do that Canopy growth investment.
No, it was a drop in the bucket for them.
It was a drop in the bucket.
Yeah, they lost that entire investment, but it was small. Actually, Sam did. Yeah, Sam did lose money last quarter. They lost 16 cents. They were supposed to make $1.97. I mean, they got some problems here.
Yeah,
so I'm staying away from Sam. I'd much rather own Constellation Brands than Sam, but I'm not buying any stocks that are near 52-week highs.
I would just do what Joel tells me to do sometimes, right? Pull up the calendar and then see how the earnings and the surprises have been. And what do you see on the last four? Boom, boom, boom on Sam. And that's just kind of showing you. And where's it heading? Heading in the wrong direction with the surprise of minus 108% there on that estimate. Dennis giving you that 16% loss there. And the expected was $1.97. So definitely
value trap. It was a value trap, and now they're actually lost money last quarter. I'm staying away from companies that are losing money right now.
What do you think about that action that we got yesterday? We didn't get to talk too much about it, but it was in General Mills. General Mills having a good day. I know that we've been seeing some of this value trade come off, but I'm wondering what do you see here?
Defensive stock makes I think it's a new all-time high. I mean, how many stocks are making new all-time highs? That's absolutely incredible when you think about it. With that being said, I'm not buying stocks making new all-time highs either. This isn't a bull market. This isn't one we're buying breakouts. I'd rather short stocks making new all-time lows than buy stocks making new all-time highs.
Interesting to mention there. One that I'm keeping my eye on is stocks like DG and stocks like that. What do you think about Dollar Tree or Dollar General in this kind of environment?
I mean, that bounced back huge off of their earnings report last, obviously they got targeted and then, they didn't do as bad and they've come back a long ways. But again, we're approaching stocks that are making new all-time highs. I mean, when we're in a raging bull market, these are the kind of stocks you want to own. But when they bounce back, and DG has had a bounce back of 183 to 248, eventually, if the bear markets get ugly enough, they come for everything. So I'd be scared of buying anything near all-time highs right now. Even though the relative strength is awesome, maybe you say these are the kind of stocks you want to own, but we've seen them get hit before, and obviously Target's a different story. It's not recovered really at all. That's pretty impressive, Joel. Just talking, take it over to Target. I mean, 3.06% dividend here now. It's down $110 in a month and a half.
I know.
It's typically a lower beta stock. What's going on there?
I was looking at this one.
They screwed them
it
up.
Never really bounced. I mean, was now it's back. It's back at almost at the low of the move, 138.58. It's $2 away. That thing, I mean, Walmart got a little bit of a bounce, but people were asking about. I tell you, I'd be worried about this Walmart now. You had the low, you had the bounce, a little bit of a failure here. I mean, these things are just people got smoked, and they're not getting back into these issues. So, I don't know.
Back to the shopping list. Like, what would you buy though right now? Because I bought Meta. Joel's not buying nothing. I think you got to do some shopping. But it's a tough. Like, I mean, we talk about the 50% retracement of the recent move. So we had SPY.
We're through it.
362,
We're through it, Dennis.
up to 380, down to 375. We're just through it. Just through it today.
Yeah.
Important day for the market. Can it bounce around here? Can we get, some buy the dip coming back in? Can we get some people, ahead of next month's CPI data coming in? We're end of the quarter.
What about end of quarter, Dennis? Real
That's something
quick.
to think about here too. So
I wanted
sometimes
to
you get
ask
some
you about
volumes.
that. What do you think about
Well, you
they're
should
not
see
gonna-
some volatility on the close. You should see some
Okay.
movement on the close. We often get window dressing. People want to sell the laggards.
Undressing.
Window undressing in this case. You might see some of that. So maybe you get a washout low in ARC. Maybe there is, that
$40. That's what you talked about in ARC. We haven't
there.
got there yet. Yep, we're there, right there.
39,
right now,
35 to 40. I think
there it is.
You could take a
We'll
shot.
see.
You could take a
Take
shot.
a shot at anything, right?
You can take a shot at anything as long as you know where your out is. So if you could take a shot, not long term, ARC's never going to my long term account. But as a trade here, let's talk 50% retracement of the move. 35.10, 35 is the low of the move, up to 46. Pull back. Yeah, you're right in there. This 39 to 40 area. I think you should find buyers in here. So let's see if we can bounce out of there. It's been an ugly couple days though.
All right, I'll check in with you guys later on. Everyone have a good day.
All right, we're going to go ahead and start wrapping on up here. Like always, guys, go check out Joe Elconin on PreMarket Prep Plus if you guys want to go ahead and do some extended ticker time. I'll be getting on over to live trading action, and guess who's going to go do some real live trading? My man, Dennis Dick.
Yeah.
You already know.
All right, we'll see you, Mitch. Have a good one. Chat.
Hey, keep on going. Keep on going. Let's do this, guys. We're going to go ahead and take a look at what we're going to be trading on today. Like always, we'll be getting to live trading action. I want you guys to come on over. Come trade with Lord Ryan, Zunaid, and I as we go ahead and jump into the markets. Like always, we also want to know, what do you guys want to see more or less of on PreMarket Prep? Is there anything that you guys want to see us cover? We'll definitely go ahead and touch it. Hit the comments after. I know that we got a lot of love yesterday. I saw a lot of comments also letting us know how much they appreciate what we do every single day for them. So thank you guys out there. And like always, we're going to keep doing it because you guys are the reason why we do it, is to definitely help you guys get into this trading action. So thank Dennis, thank Joel, and I'll go ahead and get you guys on over to live trading action. Later today, we got some great stuff, of course, like Benzinga Live, Stock Market Movers. Come on over. Come check out the new shows that we have right now, and we'll keep it going right here on Benzinga.